All right, welcome back to another backtesting video. We are on USD CAD, a weekly chart, a weekly time frame, right? Another opportunity for us to sort of look at price from our own advantage, um, in comparison to a live market, which is much slower. We can trade price and control how fast price action moves, right? So let's jump right into it. So right away, the most initial thing I can notice is price sweeping this high right here. And I'm going to mark that out right here. So that weekly high was swept. I can quickly take that. It was swept. We see a weekly order block right there. Right away, I can spot price. Because right now we are seeing price. We ask ourselves, where is price going, right? There's a bullish push right there. But we see a lot of wicks, we see which indicates lack of intention to move up with momentum, right? We see wicks there reacting from this is another block, right? So that's where price is traded into right now. We see a weekly low to the downside there. And then I'm just going to paint this a warm color right there and then duplicate it because I see another weekly fair value gap to the downside. So just marking everything out and seeing where price could be gravitating to, right? So I move down to my daily time frame. This is that weekly low there, and that is that weekly fair value gap, as you can see right there. So daily low, we see a daily low, we see a daily fair value gap also right here, right? Remember, price I just traded into a weekly order block. So the next draw on liquidity for price to reach for, to react from, is this low and consequently this weekly fair value gap. But if you drop to the daily time frame, we see that price could be reaching for this daily fair value gap as sort of like a liquidity grab that would push price to the downside to those weekly bias that we established, right? That's a blue color, but because it's in the yellow space, right? It's that color. So there, we just narrowing price. We're squeezing it, if you like, if that's a way to put it for you. We're squeezing price into a much. So that's a daily low. And now if you move to the 4 hour, right there, I'll be using this flag from here to here. Right? You see this huge area there that price could be reaching for to sort of balance out. So if I mark out my equilibrium, you can spot right away that we are in a premium area. So I expect price to reach up. Look, there's a 4 hour high. To reach up there, let me just, this could be confusing. Let me make it a one color for equilibrium. Right? So we could reach up to push down. Okay. So yeah, let's move to the 15-minute time frame. Remember, there's a high, but I won't mark it there because it's also the opening of that. It's also right on the opening of that fair value gap. So maybe not too much of a reason. Maybe not. There's not much of a reason for me to mark there out. Turn on my period separators there. This is the start of a new day. Price is going for that daily fair value gap and also that 4 hour high. So we see price traded up into there. We're still looking for sales. Remember, we are in a premium area that's gotten us into the daily fair value gap, and then this 4 hour fair value gap that lines with the daily fair value gap there. So we're trading up into there, sort of like a liquidity run for price, liquidity raid for price, reacting off of ooh, that looks like news. That does look like news. Okay. Okay, so we still see price trading on the 20th. Let's move to the lower time frames so we get it. We could probably take this off here. Remember, this is a weekly order block, right? Price just moved up so it could cover this 4-hour and daily fair value gap. I just took that off. Remember, it's a daily fair value gap. Price is sort of covering it up and respecting it at the same time. For a low, this is our 4-hour low, sitting right on equilibrium, right? So we just grab this liquidity, right? So where's the next draw on liquidity? Well, it's this low. So I expect price to be moving to the downside. I drop to my entry time frame, play price forward. Price moved up more, obviously sweeping Asian range high, right? Creating structure, breaking structure right there, right there. All right. So keep in mind when a weekly order block. So let me just take this off so we can see. You can see what price is doing. Zoom it out a little bit. Price is breaking structure right there. Right. We swept Asian range high. We're expecting sales from higher time frame because we're premium. We see price traded into another block on the daily time frame, traded into a fair value gap on a weekly time, on the 4-hour time frame, also into a fair value gap. The next reaction to the downside is this fair value, is this 4-hour low. It has also created this low right there. So we should mark that out as an initial, the most initial targets on our 4-hour time frame. Right? On our 15-minute time frame, we are sitting, we're just outside of New York, 10 p.m. But this break of structure happened without a fair value gap. But I am going to take it few bars backwards. I'm going to drop to my, actually, let me take it one forward, drop to my 15-minute time frame, right? So we closed below, and price is a little bit wonky because this is still a simulator that simulates real life data, right? So we broke the structure inside of New York, right? Broke the structure inside of New York. If you go to the time, no fair value gap on the 15-minute time frame. But we've seen an indication that price does want to go down. If we don't have a fair value gap on the 15-minute time frame, we can drop to the 5-minute, and we do have a fair value gap right there, right? You can use the opening of the fair value gap, but I would sort of measure out with my Fibonacci. I can use this high to here, use that high to here, and they all fall into the fair value gap, right? I can use the most lowest one, so okay, and I would have been tagged in right there. I can put my, let's say, so safe spot would have been tagged in, and I could go for, well, this low. I like to use 4-hour target points. So this low right there, actually we have a fair value gap before that low. The candle is not closed yet, so it doesn't, for me, it doesn't count as a fair value gap here. So I'll be using this low as target point. We're going for my 2-to-1 as usual right there. Remember, this happened, the fair value gap, it happened inside of New York, right? 9:55, 10 o'clock, this fair value gap was created right on 10 o'clock. So it still counts. It still counts, right? On the 15-minute, it looks a little bit better, but you can see the clear breakup structure right there, right? A retrace, a fair value gap that was missing on the 15, retrace. And if we play price forward, did a retest at this point, went down, came back up, did a retest. So if you miss this entry, that's would have sort of gotten you in, but we got our 2 to 1 and we ultimately got that 4 hour low to the downside, right? We ultimately got that 4 hour low there. So that's just a very good way to look at price. That's basically what this whole course is all about, to see price in this way that I'm looking at it, to help you go from a higher time frame like the weekly and the daily and the 4 hour, and take your entries on the 50 minute and 5 minutes. Everything just ties in. You want to see everything on your entry checklist before you take any trade.